Good morning, good afternoon, good evening. Let's get this show on the road. All right, guys. Ah, Um, hope you're doing good today. Today we have a very interesting topic that I think that will benefit most of us, including myself. Um, and you go to these social medias or you hear a lot of videos like how to buy a house with no money, how to do this without no money, but they never really give you step by step, or they skip stuff, or there's no where to start, or basically it's just some type of bait for you to sign up for subscriptions that you're really not interested. You're just curious to see how it's done, and possibly you doing it yourself so that you could also benefit on this way to grow your real estate portfolio. Now, what we're going to be talking about is using your equity, using the equity of your first home to buy a second home, right? So just keep in mind that in order to do this, you're going to need to have a home, okay? Now, not to say that you don't have a home, that you should start watching. You should watch it, share it with a friend, do what you got to do. Guys, and remember that if you have any questions whatsoever, um, be you're more than welcome to drop it in the chat. Um, I'm open to questions and to see how I could help you. I don't worry, I could look at it in my system here. I could quickly see if a call, not a call, if a drop. I mean, it would be funny if you guys did call, but so yeah, I think this is something that will benefit a lot of you. And but you need to be careful the way you go about this, just because you want this to work, and sometimes there's small setbacks that need to be taken in order for this to be successful, and some homework for you to do. So it's not like I want another house, let's use some sort of use my house as leverage and let's proceed. That will be the general idea, but how do we break it down? Okay, so that's basically what we're going to be talking about today. I have had some clients um do this. So let's see where are we at. Okay, share my screen. I'm trying to get my. Okay, are we sharing? Yes. Okay. All right, let me see. I always like having this screen bigger than. Okay, hope you guys can see that. Okay. All right. I always like for you to look at the context, because I know that you guys could hear me, but okay. So so what's the difference? Oh, am I in the right page? No, I'm not. We'll get to that, don't worry. Understanding that there's different products to in order how you do this. Defining the home equity and its growth over time. Explain the HELOC versus equity home, pros and cons of using a HELOC for a second home. Okay. I'll tell you this, you won't be the first one to do this, and you probably won't be the last one. Okay. And there's different ways to purchase a home with minimal finance putting. So defining home equity is over the growth of time. Remember that if you own a home, unless if you haven't purchased it outright with cash, then the whole the whole value of the house, the worth is yours, belongs to yours. So if you were to sell it, after fees and stuff like that, it goes to you. However, for most people, they have a mortgage, and throughout the years, you paying that mortgage down, and at the same time as you paying this mortgage down, hopefully your value, the value of the home, is going up, right? Expanding how much worth is your home, because you're reducing the of the house, plus the value of the home is going high. So a quick example, let's say that you purchase a house before the pandemic, right? It's just easier, since it's really fresh on everybody mind. Um, you bought it for 200,000, simple numbers, and then after during values of home skyrocket, right? So let's be aggressively, and let's say it went up 80K. Okay, now we could say that the house is worth 80, but at the same time, whatever all these years has passed down, you have been paying off, so it has reduced as well. And we also need to understand that that amount, it's for you could use it, but most of us think that we could only obtain that money by selling our home. But that's why this program comes into place, the HELOC, or home equity loan, that you could tap into that money, keep your house, and use it. Now, this program has been around for a long time now. I'm pretty sure you probably heard different people talking about it, right? So what is the difference between a HELOC and a home equity, right? They pretty much do this. The goal about this both loans is the same, right? You're gonna receive money, but it's how you receive it. All right. The home equity loan, you get it in a whole. You get everything at once. Okay. This is your boom. You get it. There you go. You do with it. Okay. Now the HELOC is basically you use it as you go, so you get charged for the amount that you use. An example is like, I use 10K to throw my daughter's Sweet 16, right? 10K, so then I will pay interest on 10K, right? Compared to the other one, I'll start paying the whole amount as we go, okay, including interest. Okay, so as well, there is interest, okay, when you take out this. Okay, so don't think that, oh, because this is my money, I don't get to pay for it. No. Okay. There is interest. That otherwise, how is the banks or the person that is doing the program gonna get something back in return? Remember, something that I tell my clients, it's the bank needs to win in order to make the product. If there's no profit for the bank, then there's nothing. Okay. So I hope you guys understood understood the gist of it. Okay. Evaluate. So this is really good. Evaluate financials, feasibility for the second home. Consider expenses like maintaining maintenance, taxes, insurance, HOA fees, important financial plans, and handling multiple properties. Okay, this is, I know that that we just want to jump in real quick and say, hey, I want to do this. Okay, and we'll get to that. But at the end of the day, is this suitable for you? Is this the right path for you? Because um, financially, it needs to make sense. And I'll explain. Um, if you want to buy a second home using your home line of equity, then you're gonna have to sit down, write down all your expenses and how much you pay monthly for your home. Okay, understand that once you tap into the line of credit, like I mentioned before, it's gonna be another cost. Okay, how much that's gonna be, we'll get that to a second. So let's just say it's gonna be, let's say $500, all right, to take out, to pay the equity, right? The my mind went blank, to pay the line of credit. Okay, so in addition to all your expenses, you have another, you adding another 500, right? And plus you're gonna be adding the mortgage of the other home, of the second home that you're gonna be purchasing. Right now, at this point, we really don't know how much it's gonna be, but at this point, if you are really serious, you should call your lender or call a realtor and say, hey, this is what I want to do, can you help me? And at this point, you need to be very transparent, because any setback is gonna hurt you a lot. Okay, so transparency is very important, and don't be afraid of your numbers, of your financials. Okay, just don't be afraid of them. You are paying them, but if you really, as of right now, you're struggling, then I might consider really taking a different approach. And if you are over leveraging, and when I say that is that maybe you have your credit cards tapped out, you have everything like maximized, so it's gonna be hard for you. So how about we grab that line of credit and pay off your credit cards, right? But you need to be disciplined. This is the most hardest thing. If you're gonna just um, pay your credit cards to reuse them and max them out again, then don't do it. It's just you're gonna put your home in a bad situation. So that's something that you really do not want to be doing. Okay. Okay, moving along, it says potential tax benefits such as interest, deductibility, tax consideration for rental and vacation, important consultant, and professional. This is like I was talking about a little bit before, talking to your professionals, talking to your lender, talking to your realtor, choosing whether you want a vacation home or you want a rental home. If you want to create passive income that we all desired, then maybe that's what you want to do. And so now you have questions like, okay, I want passive income, but is it going to be enough? So that's how your realtor comes into place. Like, Dany, I want to buy in Houston, Texas. How's the rents? And definitely rents right now are anywhere from 1,500 all the way to, in a decent home, it probably be 2,100. Okay, those numbers make sense. It might be able to pay off whatever, to upset whatever you need to pay off on the home equity plus some, right? And that's when your lender also comes into place and tell you this is the numbers that we are looking at. So it's very important. It's a team effort. This is not a one band show. You know, it's like it says, consult and what you desire. If it's a vacation home, then that's a whole different story, because then you most likely won't have passive income unless you try and do Airbnb. But then at that point, is it really a vacation home? So that's that. Okay, so before we get into the good part, okay. Risking, it says here, risking borrowing against a primary home, fluctuating interest rates, and market downturns, assets that were the second home located. So this is all very good points. This, or every time we do something, there's always a risk. Nothing is 100% safe. So with that being said, so what are some risks if you end up going back? Let's say you lose your job and you won't be able to pay off your home line of equity. Yeah, you might be able, that's gonna accumulate, and then something that turns something good turns not so good. You know, when it says fluctuating about rates, make sure that you get fixed rates. This way, there's no surprises. We all go through up and downs financially, right? And we don't want to get caught out there when we are down. A rate goes up, and then you get hit with unexpected financial obligations. Okay, and assessing the market, make sure you speak with a realtor, make sure you speak with a lender, or speak with somebody that has done this before. I'm always available, so if you need a set of eyes, I'll be more happy to take a look. Let me see if anybody dropped any questions. No questions, that's fine, no worries. Okay, what's next? Okay, uses. Okay, so this is what can you use the property for? You could use it for a vacation retreat, for rental property, future residence, benefits of renting to offset costs. This is all choosing uh tips on choosing the right location for value and lifestyle. This is all good points that you need to talk to yourself or to your spouse to make the right decision. So how do you go about, who offers this program? Well, technically, any bank, right? Any bank. If you go online and say I want a HELOC loan and Google it, you're gonna get a ton of things. Okay, but I ran across into a I'll help you out here. I ran across uh, if you're from Houston, you probably know Frost Bank. Okay, Frost Bank has an incredible program right now that is offering. So look, that is offering this. Okay, so now another thing is that let's say that you went with, let's say you banking with Chase, let's say you banking with Wells Fargo, let's say you banking with uh, I don't know, with somebody, and another bank is offering the home equity, you could apply for it. It doesn't really matter. You don't need to be within the same bank in order to qualify for it. Okay, so here you go. This is the interest rate right here, as you can see, is 3.99. That I think, and it's fixed, right? It's great. Now they do have different programs. I don't know all the programs. I'm not gonna here tell you that. Yeah, I'm an expert. Frost has not. I don't. He did not sponsoring me. I'm not. There's no collaboration here. I just received an email for one of the employees, and they told me they mentioned this to be aware and to promote it to people like you and I, so there you go. They have an amazing program. You get to pay 238 with 40 cents for 30 years. Remember, 30 years. Now all of them are not 30 years. They have 5 years, 10 years, 15 years, 20 years, and 30 years. Okay, so you could pay it as quick as you can. No, there's no penalties for paying it off before. the whole purpose of this is that keeping your monthly payments low, right? So imagine getting 50K, you already own a house, you own, let's say you own a house, you bought it for 200 and now it's worth 280. So now you have like more than 50, but you only need 50 to buy a house in all reality. So you say, let's say you add for 60, or you add for 50. Let's just keep it, you ask for 50, you get granted, and you speak to your lender, you speak to your realtor, your financial looks good, and then there you go. You have the additional amount to for a down payment. Now, your lender will have to add this cost. They will have to add it to your cost. Now, keeping yourself within that debt to income ratio, it's also important. That's why it's important to speak with your lender before you do anything, because all these numbers go aligned. Before doing this, you need to sit down with your realtor, make sure so they could explain to you the process. Hopefully, they know the process, and that's it. And the money will be there. This doesn't take a lot of time. This takes, like, I'm thinking, um, a few weeks. I believe this is not gonna take no 30 days. Okay, so that's good for you. And what is it? What is the requirements? So right here, as you see, this is the gentleman that I spoke with. You could reach out, tell them Dany send you. I don't get nothing out of it, um, just helping out. So here's the requirements, right? Let me see. Get that? Okay, for fast, it says right here, for fast application process, please prepare to have the following documents. So they want a government issued photo ID, your social security, you need a social, appraisal value, they'll do that. Proof of home insurance, current mortgage statement, you have one. That's why I said at the very beginning, you need a home. And then 2-year taxes, returns, current pay stub, and last two W-2 that applicable. Sign and date financial statement if loan exceeds 100K. HOA statement. Why do they need the HOA? Because they want to know everything that you are obligated to be paying on the property. So your HOA is and has to be included. Real estate expense for other real estate owned single family dwelling. Okay, so I'm guessing that is if this is not the first time you're doing this, I guess this is the other one. And then it says proof of current construction contract, of course, a breakdown. This is okay. So this is okay. It says right here, if you intend to apply a home improvement loan, please follow the formula. Yeah. So if you trying to, so remember this money could be used for anything. Okay. So if you want to renovate your kitchen, if you want to do extend your home, you want a big patio, if you want to work on any area of your home, this is it right here. Okay. And they will explain to you which program will benefit you more. Um, but this is it, guys. I think that I basically covered everything. It's very important. Just know your financials, right? Be honest with yourself. Don't get into debt if you don't have to. But if you want to grow, I think that just go to, the best programs. It's not held by your bank. Go to any credit union. Go to any credit union and or federal union. They normally have the best programs for these type of loans, right? So yeah, do your little research. I'm not promoting frauds. It just so happens that at the moment they have an amazing program. But you could go online and let me see if I could. Let me see if I can. 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 Let me see me see real quick so I could show you that I am not lying. That you could go right now and you could find any bank offering let me see okay home line of credit programs. Oh, my computer is acting slow because I have so many things running at the same time. In Texas, yeah, in Texas. Let's see what we got. There's Frost. There's Frost. Bank, you see, Bank of Texas, Credit Union. I just finished saying this. I have no control. Another credit union, Energy. It's a local bank. And then I don't know what's this, American National Bank of Texas. And then we have Bank of America. And they all offer the same thing. Bank of America, I'm curious to see what are their rates. Now, I say Bank of America because they are more well known. Let's see. They don't say what are their rates. Okay, take advantage of these discounts. I saw a low rate. Okay. Special introductory variable. The variable that we don't want that 5.7 and that okay. Oh, but okay, this is different. Okay, so let's go Texas. Let me see. So that's what I'm trying to tell you guys. You need to shop around, see what's good for you. I will definitely recommend starting off with credit unions, federal unions. They have the best programs. They will definitely help you out. It doesn't say the rate. It only explains to you, okay, that's good, knowing what you're dealing with. But yeah, do that. I hope you found this very interesting. If you have any questions, now is the time. I have no questions. But yeah, this is the way that how you could easily grow from one property to another property. And if you want to repeat this, you could repeat this again. It's all about scaling, and you have more power to you. But yeah, guys, that will be all. If you have any questions, you can always drop them in the comments and I'll be happy to answer. Please like and follow and share away. You guys have the rest of the day and God bless, and I see you next Wednesday. Bye.